Adam Button, my buddy, Trading Warrior brother. Thank you so much for coming back. It's still early July, so maybe we could attack some of these seasonals.
Yeah.
I see your webcam. You're out of the there. You popped in like a secret agent, man. Huh? You're like James Bond, buddy. You look great. How are you?
Good. Yeah. Doing great. This Friday.
All right.
On Friday. Lively.
Yeah. What's the temperature like where you live? Are you in the heat wave?
This time is good to be Canadian in July.
Yeah.
35 here. Well, that's not 100. I think it's like about 90.
Okay, with 90% humidity.
Very hot humid.
Yeah. Okay. It's like Chicago weather. So let me ask you about your impressions of the non-farm payroll and the dollar not getting a lift from any of the strong numbers.
Yeah, I mean, the market is still sorting it out. It's bounced back a little bit. I mean, you had unemployment tick up, right? And participation also ticked up. So it's not such a bad number on that read, although the wage growth was a bit soft. And I mean, that's the kind of name of the game right now. Headline, whatever, headlines are fine on the jobs growth, but it's that wage growth that's just not there. And, that's what the Fed wants to see. But, we hiked, we're going to hike again in a couple months, and the Fed's looking towards the end of the year. I don't know how much this is really going to matter, with trade and everything else. This is kind of the status quo sort of report here.
I know you follow market fundamentals. Is it true? I read something about a failed T-bill auction this week in the U.S.
Yeah.
Okay. Anyway, I heard about that.
That sounds, unless it was something around the holiday, they pulled one.
Yeah, maybe.
If they move things around and rumors get started.
Okay. All right. So before we talk about the tariffs, what are you looking for in July here?
Yeah, on the seasonals.
Yeah.
It's a strong month for yen. I mean, there's not that much going on in July in the seasonals. It's the biggest month for yen, the worst month for dollar yen. Seasonally, and down 7 of the last 10 years, but 1.25% or a little bit better on the average in 10 years. So it's a soft month for dollar yen. In the bigger picture, there's not that much going on in terms of seasonals. For outside of FX, it's a stronger month for equities. I mean, June was a soft month, and that was true in Europe. America was down just a little bit, but it was a soft month in a lot of places, as usual. June, July is a bounce back month. Europe is especially strong in July on the seasonals. Base metals pretty strong.
How about the precious? They turned a little bit this week, or isn't it entitled for at least a bear market rally? Gold back to
How high can a gold bar bounce if you drop a gold bar from the top of the building there?
Ouch.
Yeah, no, I think it's pretty soft. I don't think it would bounce that much.
Yeah, it wouldn't. All right, so still pretty negative there.
Oil. The interesting one is oil. There's this. Every year it's kind of strong in the first half, weak in the second half. Last year that was reversed a little bit, but that's the bigger seasonal trend, is that oil is weak in the second half, starting in July. We've seen a little bit of that already, but that's a headline market right there. But I think there could be an argument. I mean, there are not a lot of oil bears out there, so watch out.
They were cleaned out. So we have started correcting. What's the average amount that it's down during the month of July?
I think it's 2.5% on average on 10 years. Which you look at oil now, it's down.
We've done it.
Last 2 days, right? It's down.
Yeah.
But
okay.
So that's just the way oil is right now. It's very volatile.
So are there any currencies on the majors that you're interested in? Do you think Euro has a chance to make a move up towards maybe 120? A lot of people are talking about this, Adam. I'll put my screen up. Potential. All right, the potential of a rally back to, I think, at least 1840, And some people think, and I started thinking about this a while ago, that maybe we get a right shoulder up towards 120, and then you have a neckline here.
Down,
I think
sure.
the dollar, and if we have a weak dollar, that would probably support the seasonals in the stock market too during July, because it seems to like a weaker dollar.
It does like a week. I mean, it's kind of the old paradigm though. You have these lower yields a lot of time in July. So I mean, that's coming into the third quarter. You get a bit more bond buying, and that's kind of pulled down the dollar and helped to lift stocks. But you know, that paradigm isn't really in play this year with the trade war. So I think if you were to get lower yields, you probably mean some sort of risk-off sentiment, and it wouldn't do so much for stocks. But you know, if you look, I look at that, and even in the shorter term, you kind of broken back above the end of the June highs just in the last hour on payrolls. I think so. You're probably looking up at 118.50 for starters, and then you know, depending on what happens there, I think if that were to give way, you can easily get up to 120, 122.
Okay.
Fairly short order. I mean, you look at what the ECB was saying today. They're trying to push expectations up. Merkel seems to have gotten back on top of things. You know, Italy's settled into the political risks in Italy, and you know, there isn't a big reason out there to sell the euro. You probably have some positive euro sterling flows given the mess that's happening in the UK. So, you know, I'm pretty constructive on the euro down here, barring any disastrous headlines. But I like those technicals. And
okay.
Yeah, what happens when we get up to 120 and the right shoulder? It's probably a little premature for that.
Yeah. But you do the right thing today, and tomorrow takes care of itself. You brought up euro pound, buddy. You know, I've been looking at this as being an incomplete formation for a long time, thinking that we have a 1, we have a 2, and there's something missing over here. And, you know, I know a lot of the bears were talking lower numbers and they had a false breakdown here. You're just talking about we could see good euro flows over the pound. Do you like euro pound in here?
Yeah, I think it's a good spot. I mean, if you look at that, there's so much indecision on that chart. And
yeah, in fact, I think it was a Forex Live tweet that had, I don't know, maybe you're quoting some broker that liked euro pound here. You do a lot of those kind of tweets where you tweet out
this Brexit trade, right? Like right now in sterling, you've got Carney yesterday. It was pretty hawkish, and you had a nice look like a bit of a break in sterling or cable at least. And then, you know, it just gets slammed back down on a Brexit headline saying Germany didn't like the deal. And Theresa May's trying to put together this deal, and she's kind of hanging by a thread. You know, part of her party wants a hard Brexit, part of it wants a soft Brexit. They're both very dug in. And then she kind of wrangles everyone into some poor compromise and then takes it to Germany, and Merkel gives it a thumbs down right away. And, you know, what's she going to do now? There's just no way out. I don't envy her. And you know, at the same time, the economy's doing okay. Carney's talking about hiking. You know, Carney, he'll say he's going to hike one day and then change his mind the next day. But I think he's done that so many times that he has to follow through in early August. I think it's August 2nd is their meeting. So there's a bit of a tailwind there, and there's like this kind of detent in a lot of the sterling trades that could break, especially if things fall apart with May. But I don't know, maybe if the UK government falls apart, that ends up being good, you know? The market sees that as less of a chance of a Brexit at all. I don't know. So
yeah, you never know with the divorce going on. You have a feel for what's happening in the yield markets here? Adam, you know, we started to come off on the 10-year 310 and, you know, bounced here, but it looks like they continue to erode, and the longer term paper is even, you know, weaker, which means lower yields. And I think, don't you think that if the Fed follows through with a hike in September, that by the fall we might see an inverted yield curve? Because I think we're already seeing a global inversion.
yeah, well, what's two stands up to? What are we at now? If I just pull it, 27 basis points, 28 basis points between 2s and 10s. So you're, you know, and the Fed in the minutes yesterday was talking about an inverted yield curve. You know,
that it doesn't mean anything.
Well, yeah.
They downplayed it, right?
It's crazy when you listen to Fed, like some of them, Williams, for instance, of the Fed, he kind of dismisses it outright. And then you have Bullard, you have a few others that are very worried about it. And, you know, what's the Fed to do? You can't really, at this point, you can't walk back all the hikes you've talked about unless the data goes bad or we get into some kind of trade war. So and even then, you would probably invert it on its own. So, but like, I guess the point is the Fed has manipulated the bond market intentionally. That's what QE is for so long.
Right.
That, you know, what should you really be taking a signal from that? You know, I mean, I think yields are going lower at the long end here. Like I said, there's a seasonal pattern of that. And you have a few Fed members, we heard it from Bostic last week, talk about, okay, maybe let's just do one more hike this year instead of two. So there's a bit of dovishness creeping in as well.
Yeah.
You know, you can invert it one of two ways. You could hike twice more and pull up the front end, or you could run into some trouble and then the long end gets pushed down and you invert it anyway. So it's almost inevitable at this point. It's so close, but I don't think I'm going to take it as a signal. But I mean, if you were to tell me that the yield curve is going to invert this summer, I mean, I'm selling stocks, right? Especially given all the other worries.
Okay.
Selling dollar yen as well.
All right, so I mean, I think the most embraced market thesis is that bonds are in a bear market, and I was talking about it. Here was the Fed. You know, they tried to pop rates after it came back down, and failed after the Fed rate hike. And if someone put a gun to my head, Adam, I'd say that we could come back and test these lows out again.
Well,
especially back under
inflation,
270, huh?
I mean, the same people have been saying inflation's coming for 10 years now, and it does material. We're in an age of globalization and automation. And globalization is essentially moving production to wherever labor is cheapest. So that's driving down wages. And automation, which is taking wages away altogether, and they go hand in hand. I mean, if you can automate something to dumb it down so you just need a few workers, I mean, the workers are doing such a little or such menial work at the end of the day that it makes it easier, and in that environment you just never get inflation. And by the same token, you can produce things so much faster, so much more efficiently, that anything you can make for almost nothing. And and you know, that's my long-term belief in the market, that inflation is never coming back.
Okay, so inflation may not come back, but aren't higher prices going to hit the consumer when China retaliates and someone goes into Walmart? Aren't consumers going to be paying more for everything? So we could have kind of...
In that case, it would be deglobalization, right? That would be kind of like a deglobalizationary force if you get a trade war.
Okay, so that's what could unwind it, but that could take some time. Or you have the worst of all worlds, where you have deflation of financial assets and, you know, and bonds and maybe, you know, stocks, and eventually, who knows, real estate, and that makes the job market more difficult, but we have to pay more for everything.
Yeah, that's the worst of both worlds, like a stagflation. You know, how much would America tolerate that? You know what I mean? I think Trump measures himself by the Dow Jones Industrial Average, to some extent by the unemployment rate. I mean, is it so important to win a trade war with China? I don't know. Things can get out of hand, though. I mean, nobody goes into any kind of war thinking they, you know, want to see people dead, let alone even job losses. So, you know, things just they spiral and they escalate, and I find the amount of complacency even this week to be just nuts. I mean, the tariffs went into effect this morning, right? And China's hitting back, and you know, America, we don't really know I guess we look back to America because Canada put tariffs on at the start of this week as well on American goods, and there's all this talk on autos. And the story this week that kind of turned sentiment, I guess if you listen to a lot of people, was, you know, that U.S. ambassador went to Germany and he talked to German car makers and he said, hey, we're not going to put tariffs on you if you take the tariffs off us. And people were like, well, that sounds like a deal, but it's like, that's been on the table forever. That's not anything new. He kind of Trump himself has said that time after time. And
Right.
so I don't really get that. You know, markets kind of rally for a lot of reasons, and people will attribute things to it after the fact. But that to me is it's nothing. But there we
Well,
are.
you saw the movie Canadian Bacon. Is
Going back.
life going to imitate art? Or
Wait,
is Trump going to start a war with Canada so his
oh,
poll numbers get better?
yeah. I mean, he certainly doesn't want a deal. I think you come back to midterms, right? And he doesn't want to sign an NAFTA deal until after that.
Yeah.
I mean, the Mexican election's gone all right. They're keeping their negotiating team. You know, I guess status quo is that.
What do you think of that election? You brought it up. What do you
But
think of that? Would you be worried if you lived along the um, Mexico-U.S. border now, after this election, that left-wing socialists may do what happened in Venezuela? And, you know, right now, Mexican migration to the U.S. has not been the issue. It's mainly been Central American people coming here, escaping from MI, whatever they are. But if this guy takes Mexico's economy the way of Venezuela, I don't think a wall will stop him.
no, I mean, it's as long as there's an open border there. I mean, that's the key to stopping immigration flow, is make things better where they are. And you know, if you listen to him, and the guy sounds very status quo from what he said so far.
Really?
And
Okay.
you know, just since he's won the election, I mean, like the campaigns, let's see what he does. He's like striking a committee on the airport. He's keeping the NAFTA team, and hasn't really said and done anything yet. And the Mexican system has checks and balances, and America's very strong in Mexico. So I don't really think it could happen there, but maybe you could have something like, I mean, you look at Syria, which is the ultimate example, right? And it's destabilized all of Europe.
That's true.
And if you're Europe looking at the United States, you say, like, the Americas played a part in destabilizing Syria. And if you could play a part in destabilizing Mexico, maybe that's tit for tat. But I don't know if the world really works like that. I hope it doesn't.
You have a view on the peso? I have it up here right now.
I think for me, the best trade for a long time has been Acapulco real estate. I mean, there's a huge drug war there. It's terrible, but you're a couple hours away from Mexico City, and it's an amazing beach. It's a short flight from America. Eventually, it will get better, and it's cheap. So I think, eventually you're going to get.
It's under pressure because people have fear of their safety to live there.
Yeah, it's blood in the streets. It's truly buy when there's blood in the streets. There aren't that many great beach resorts in the world, and it kind of comes back to Mexico in general. I mean, this is a country that's like literacy is like 100%. It's fairly modern country, for peaceful country aside from criminal gangs, and you're right on the doorstep of America. You have oil reserves, you have other minerals. Like Mexico in the long term should be doing so much better, but it was the same bet in 1995, and it hasn't really materialized. But one day, this drug war is going to end. These cartels have to lose. I mean, if you look at a place like Colombia, it's very peaceful now. Mexico should one day will do the same thing. But right now, I think it's also a pretty good trade. And anytime this election risk passes, just into the short term, there's always going to be a bump. And you've seen it in every election in the last couple of years. The Italian election, we saw the euro come back after that French election.
Right.
So it's always a relief rally, and we're kind of into that right now. Yeah, you can see it there pretty clearly.
How about these Nordics? Any view on like the USD NOK? It's been coming off lately, and USD SEK sold off pretty good this week. Any view on these?
Yeah, well, Sweden, the central bank stepped in there a little bit, and I think there's a sign that things are doing better there in all of Europe, and it will probably come through the Swedish currency before you see that Europe kind of disentangle itself from some of the problems. So I do like that. On the broader European trade, the krona, it's about an oil trade, and I think the risks are a little bit to the downside here on that front. But that's not really my cup of tea.
Okay. So, Adam, why don't you tell our viewers what you do at Forex Live and the best way for them to follow you? And you really are one of the best I know at knowing market fundamentals and technicals, and you're a very news-driven trader. So, what's the best way for people to follow you?
Yeah, well, one of these days, these trade war headlines are really going to hit. It's going to be a nice headline traders market again. We're at ForexLive.com. So news comes out. We're the fastest on the news. We're the fastest on the analysis. The market moves, and you want to know why it moved. That's what we do. So if you see a chart drop out and you want to know why, go to ForexLive.com. We've got it there. We're at ForexLive on Twitter. So those are the two best ways to follow us. We are quick, and 24/7, 24/5 anyway, whenever the market's open. Even during the World Cup matches. I imagine people are starting to turn.
Who are you pulling for?
Man, I like Latin America. I got a soft spot for that.
Okay. All right. So Ecuador.
Yeah.
Huh? All right.
In Brazil.
Okay, buddy. Thank you so much for coming.
What do you got?
Huh?
What do you got? Who do you got?
Yeah, I'd like to see. I always pull for an underdog because I'm one.
That's right. I like it.
You know what I mean? We're all every man. So the guys that have had the glory, I'm always pulling for guys that have not. So Uruguay would be nice. I'm in your corner there.
I don't know. It's probably 3-0 in France.
Adam, have a great weekend and a great summer trading season. Thanks for sharing your views. We covered the board again in record time, and I encourage people to go to Forex Live and follow Adam's work and also his partners that he has there, and it's a great site. So good hunting, buddy, and let's do this again soon. Okay, Dale, thanks so much for having me. Have a great weekend. All right, thank you, Adam. Adam Button, follow him at Forex Live, at FX_Button. Everyone have a great weekend. See everybody Monday. Good hunting the rest of the day. And don't forget to sign up for ForexAnalytix right here. You have the weekend to navigate and get used to it, because I'm looking for some wild action into the eclipse on the 27th. See everyone Monday. Adios.